Hi, everybody. Thanks for joining me. Before we get started, I'd like to ask you to hit subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the 10 best stocks to buy right now. So, one of my biggest investment disappointments of 2022 is Zillow. I invested in this about a year ago, and honestly, iBuying was a big part of my investment thesis. Knowing me, you probably won't be surprised about that. But then they pulled the plug on it, and the stock just took a nosedive. So apparently, I wasn't the only one who saw potential in their iBuying business. But the whole thing we had been sold for the past 3 or 4 years was that Zillow was going to leverage its massive amount of data to do iBuying better than anyone else. So that left a lot of unanswered questions for me, and I know you have some questions about Zillow, Tyler. So, Tyler, what is the big unanswered question that comes to your mind when you hear the company's name?
Yeah, the one that really points out to me the most. You said we kind of disagree on the iBuying thing. I don't think it was working for them, and I actually applaud management for cutting bait when they did, rather than trying to keep patching it together. But with that in mind, it makes them question their track record in building out ancillary services to their existing core product. And they have quite a few going on right now. And so my big question for them is can they capture market share in not only in its core, because that's a business that does need to keep growing, but also can it capture in these ancillary products that it's building, whether it be through mortgage origination or some of the rental options that they are bringing in. I know that they're doing some, for a lack of a better term, affiliate revenue deals with some other iBuyers. So there are opportunities there, but can they actually capture enough with it to make it worth it? And that's one of the things that I've been intensely curious about, because we know the market for real estate is just down right now, and so there's a reasonable expectation of lower lead gen, things like that. But if you can continue to capture market share, I think that's an adequate enough reason to stick around.
Yeah, and the other question is, can they do that profitably? So it's not just can they get these all added and kind of scale them, but I mean they scaled the iBuying business successfully. It was just losing money, more than any other iBuyer was.
I can scale anything with free capital and no
when
return.
Money was free. I mean, that was a different question. So I mean, you mentioned the Open Door thing where they're partnering with Open Door to do some lead gen. That's one thing. That's essentially free money. But when it comes to things like mortgage origination, title insurance, the rental stuff they're doing, it's hard to turn a profit with some of that, more than people expect, and especially in a market like this. Zillow's core business is profitable. It's really important for investors to realize that. The core premier agent business, I don't know if it was in the last quarter just because of how the market is right now, but for years, that had been a profitable business. So it's at what point do you not just focus all of your effort on that as opposed to adding other products that may or may not be profitable? All right. The other question that I had, I know you have one more.
We both have this one that you're going to ask. I think we both have, because we discussed this before we recorded.
We do, and I'm sure we have different opinions on it, though. So Zillow unwound its iBuying business, as we said. It had billions of dollars worth of homes that it owned. So they sold those billions of dollars worth of homes and ended up with a lot of cash just sitting on its balance sheet. Think about $3.5 billion in cash and investments right now. Now, my smart alecky answer would be that they should get back into iBuying, because with that cash, they could buy Open Door, OfferPad, and still have $2.5 billion left. But that's obviously not the right answer, especially with how poorly Zillow fumbled the ball last time. But I would love to see them, return some of that capital. Their stock is trading at a very cheap valuation. Even if their core business can get back to its old profitability level, it's trading at a very cheap valuation. So I'd like to see them do that. And I'd like to see them kind of do some bolt-on acquisitions, but to be very selective about it. One of my biggest pet peeves is when companies make acquisitions that are just to grow. There's no real there's no real rhyme or reason behind them. Or it's in businesses that are just don't have a clear path to profitability, like when Square acquired Afterpay is one that I think of right now. I just didn't like the acquisition. So I'd like to see Zillow acquire some of its real estate peers while they're beaten down, because corporate valuations have plummeted this year. So I'd like to see them do something with that. Matterport's a company that comes to mind that I think could be a cool tech play for Zillow. But I don't know. What do you think they should do with that stockpile of cash?
Well, I'll let you buy Opendoor on one premise. You buy it, you kill the business, and just take the $2 billion in cash sitting on the books, and you buy $2 billion in cash for $900 million in market cap.
To be fair, Opendoor is better at iBuying than Zillow was.
Better, a little bit, but it's still
that's not saying a lot right now.
It's not a unit profitable business, but it's got a few billion in inventory of real estate, and it's got $2 billion in cash for a market cap of $900 million. Yeah, take the business, axe it out, sell off the inventory, and take the cash.
Buy that, shut it down, then partner with OfferPad for some lead gen.
There you go. But my obvious thing is, like you said, buying for the sake of buying or buying for non-value accretive growth is an Achilles heel for many companies. And, we saw it with Zillow, it didn't do great in iBuying. Are we really going to trust them to go out and grow in all of these things by making acquisitions? Or kind of admit a spade is a spade. We have a good core business. It's not going to grow at huge growth rates, but that's fine. It's profitable. We can generate free cash flow. We can maybe start paying a dividend. We can buy back stock. And that's perfectly acceptable. There are plenty of businesses out there that have created generational wealth from that business plan. It's like, we do what we do it well, and we send the money back to shareholders. That's a great business. And I feel like it's like, I just wish the light bulb would go on and be like, why don't we just do this?
Yeah, so that's the cash thing. Hopefully I'd like to see them put it to work. One of the biggest...
Put to work in my bank account. Works for me.
Or in their bank account. I don't know how much the interest they're earning on it. Buy treasuries with it. Do something with it. But what's the other question do you have for Zillow right now?
Well, it's kind of on that with the ancillary services we were talking about, or making acquisitions, is if those things don't pan out, are you willing to cut bait quickly? Are you going to try to, lead along and try to make it work when it's not working? Like I said, I applauded that they cut bait on iBuying when they did. They's like, we just don't see it, and so we're going to cut bait. And it looked, in hindsight, I think was actually a good move compared to how the market has reacted to other iBuyers. So, if the same thing happens, if these other things aren't working, I'd like to see if they're willing to cut bait. Yeah,
Zillow's been they've pivoted their future outlook to they call the super app. Essentially a real estate app that does everything. And my question is it going to be stuff that Zillow does, or is it going to be more like their partnership with Opendoor, where it's, a network of third-party providers that are just kind of partner with Zillow to do all their things, especially if they can't make a profitable business themselves? It's tough to replicate a company like Rocket Mortgage if you're starting from ground up. Zillow's mortgage operation is not going to be that smooth and efficient for a while. So if it's not working, do you just acquire one of your competitors, because they have that ability too? It's not just especially with these smaller. iBuying's a big, it's the elephant in the room, if you will. It's a big animal there, and if you're talking about something that's kind of smaller, like mortgage origination, like title services, like things like that, Zillow doesn't have to build that from the ground up. If it's not working for them, they do have the option to acquire someone who's doing it well. So that's another kind of unanswered question I have.
The funny thing is, though, is we talk about them doing actual mortgage origination, actual title. One of the things that made it profitable about, the premier agents was it was just lead gen. And it was basically getting, like I've said, an affiliate revenue share, or, kind of a rip on the transaction. One of the things I'm just curious is why go build all of the things like Rocket internally when you can, just go to them and say, we have the most traffic real estate related, and we get a rip on any transaction that we refer to you.
Yeah, over
That's
200
a
million
great
active
business.
users. Even in
Yeah,
this market, over 200 million active users. I mean, and lead gen's what they're good at. They're really good at
exactly.
it. So why not just double down on that? So I'm holding on to my shares for the time being. I'm down enough that the valuation makes sense at this point to me. So I'm going to hold on and see what they do with it. But it's definitely a company that has had an interesting couple of years, to say the least. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.